Clarifying the GST framework and addressing misconceptions. The Internal Revenue Commission (IRC) issues this statement to address misconception that has contributed to confusion about how the goods and services tax (GST) is collected and distributed. A key driver of ongoing legal disputes between provincial governments and the IRC is a widespread misunderstanding of the national GST framework. It is important that the public clearly understands how GST works, what the law requires, and what the IRC is and is not empowered to do. GST is a national tax, not a provincial tax. GST is established under the Goods and Services Tax Act 2003, which makes it a national tax, administered solely by the IRC. This means only national law determines how GST is collected and shared. Provincial governments cannot alter GST rules or negotiate special arrangements. The IRC cannot vary GST administration or distribution outside what Parliament has set in law. GST is uniform for every province. It cannot be redirected, customized, or reclassified based on local expectations or misunderstandings about project activity. GST distribution follows a fixed legal formula. GST distribution is not based on opinion, negotiation, or administrative discretion. It is strictly governed by the Goods and Services Tax, Revenue Distribution Act 2003, and the Intergovernmental Relations Functions and Funding Act 2009. These laws establish the National GST Revenue Trust Account, the Provincial Inland GST Trust Accounts, and the exact amounts payable to each province. The formula applies uniformly. Only Parliament can change it. GST is not shared based on project sites or resource activity. A common misconception is that provinces hosting resource projects should automatically receive a larger GST share. This is incorrect. GST distribution is not determined by the presence of resource projects, infrastructure, or company operations in a particular province. Where special arrangements have been made, for example, allocations to designated city authorities, they were created through explicit legislative amendment. Any variation to the national framework must be authorized by law, not by administrative decision, addressing claims of deprivation or underpayment. Claims that certain provinces have been deprived of GST stem from misunderstanding the law. General concepts of equity or fairness do not override clear statutory requirements. Any proposal to adjust the GST formula, provide compensation, or review revenue sharing arrangements is a matter for the National Executive Council and Parliament. These decisions do not fall within the administrative powers of the IRC. The Commission's role is to apply the law as enacted, nothing more, nothing less. GST exemptions apply nationally. GST exemptions, including those applying to certain resource project participants, are granted under national law and apply uniformly across all provinces. There is no legal mechanism for retrospective compensation, province-specific exemptions, or provincial approval or veto of GST exemptions, strengthening compliance across provinces. The IRC continues to improve taxpayer registration and compliance nationwide. Establishing IRC offices in underserviced regions will help ensure taxpayer information is correct and that businesses are registered in their proper jurisdictions. Any increase in GST collections resulting from improved compliance will automatically flow through the existing 62/40 distribution formula, IRC's position. The IRC will continue to administer GST strictly in accordance with the law. Any change to GST policy, distribution, or administrative arrangements can only occur through an Act of Parliament. The IRC will continue to provide technical advice should government initiate broader tax or intergovernmental financing reforms. This message was authorized for release by Mr. Sam Loy, Acting Commissioner General of Internal Revenue Commission.